Options, options, options. People always want to hear more about options, and I have neglected the subscribers here on the channel because personally, I just don't know enough about options. Now, I went out and I bought a book. This guy looks like he knows a lot about options. I went out and I bought a book. I started to read about it, and well, it didn't make any sense. So I said, well, I think the best way for me to learn more about options is to actually meet somebody or to go talk to somebody who has traded options for a long time and actually knows a lot about options. So over the next couple weeks, I'm going to be releasing some videos here on the channel that are going to be basically interview style with a trader who has worked for some of the largest banks in the world, who worked through the financial crisis, who really knows his stuff when it comes down to options and trading options in general. And we're not only going to talk about options, but we're going to talk about trading in general, options and equities. But really, it was just me sitting down with a Wall Street insider and talking about trading, talking about the market, talking about how to stay alive in the market, and talking about options. And that's what you guys want to hear about. People have been asking about it. People have been requesting it. So I'm going to give you guys exactly what you've been looking for right here on, well, the #1 day trading channel. So I want to introduce Felix here in this video kind of as a synopsis on what you guys are going to be seeing. So basically, I went to New York City. If you follow the channel, you would have seen. I filmed a video with Felix just sitting down and talking man to man for over an hour, asking him questions about options, trading, and just the overall emotional aspect, trading in general. So you guys are going to get an inside scoop from a real Wall Street insider, someone who has actually been behind closed doors of Wall Street, or who has been on the floor. I'm excited to share with you guys everything that I've learned and everything that Felix talks about right here on this little video series. So make sure you guys stay tuned and make sure you guys check out what Felix has to say here in this video series. So stay tuned. Why have you focused so much on options with your career, and like how did that come to be, like over the, I think you said 16 years?
Sure. No, so I graduated the University of Pennsylvania in 1995 from the Wharton School, and 1995 was actually a tough year to get a job on Wall Street. And I found myself interviewing for a number of different positions at different banks. I wound up interviewing for a job as an options trader with a woman who was a partner at O'Connor in Philadelphia. So University of Pennsylvania was Philadelphia. She was there. She worked on the floor. Great interview. She immediately invited me to Chicago, where Swiss Bank O'Connor was headquartered, and she put in a good word. I had a great interview, and that's how I landed in options. Swiss Bank O'Connor was, to give you some context, Swiss Bank had bought out O'Connor in 1992, and O'Connor Partners was known for two things. They were known for being one of the best options firms on the planet and making a lot of money, and they had a great options training course. So they were known, it was well known, the O'Connor course. That was 1995. I was with O'Connor for 3 years. Went through the course, on the job training in the pits in Chicago. And they had a product group, an equity products group that was structured products, that was essentially options structured in a way to help clients, Swiss Bank clients. That was a good training ground for me to understand the nuts and bolts of options and understand what options can do, how they could be formed, products that could be made. Ultimately, structured products is what brought down in 2008 the financial crisis. That was structured products, CMOs, CLOs, and all that stuff. But yeah, that role was a defining role for me to really gain some knowledge and work with smart people. I got transferred in 1998 to Stamford, Connecticut, headquarters at Swiss Bank or O'Connor. UBS had just taken them out. And I didn't particularly like working in Stamford. I was a young kid working in New York. At that time, I was rising very quickly. I got recruited by Montgomery Securities and a new team that was forming at Montgomery Securities, led by a guy named John Sandelman. Big guy in the business, great guy, turned out to be a great manager for me. The group was only 100 people, and eventually that became Bank of America, and then Bank of America took out Montgomery, and that's when we as a group really put ourselves on the map. We were fighting against the Morgan Stanleys of the world, the Goldman Sachs of the world. Those were the kingpins in the derivative world at the time, and that was a tremendous experience. That's where we had Bank of America's Rolodex. That's where we were talking, myself included, we were talking to the biggest guys in the world, the biggest hedge fund managers in the world. When they have to trade an option, they don't go to their TD Ameritrade or E-Trade account. They call up Goldman Sachs, Morgan Stanley, or Bank of America. And you're talking about the Carl Icahns of the world, the Steve Cohns of the world, at the time Raj Rajaratnams of the world, all of these guys, George Soros. When the phone rings, someone has to pick that up. And when you're at Bank of America, in the Bank of America Equity Derivatives Group, there's only a few people in that group, and one of those people was myself. And so I was picking up the phone, dealing with the best guys in the world, guys you read in the newspaper, articles that are written, a couple days later, you're talking to one guy, a top guy who wants to get long, get long more exposure into a company, and he wants to do that with options. He wants to lever his position because he likes it, and so it's real time going on in the press, and then you got the biggest guys in the world calling you about the situation, and they're in it. They're right in the mix of things, and so that, to me, that was incredible at a young age, in my late 20s and in early 30s. I then left Bank of America. I got recruited at Scoggin Capital Management. At the time, it was a $4 billion hedge fund. These guys were, some of the best in the business, and they were an event-driven fund. I learned a lot there, and that took me for the next 10 years. What's interesting about that whole time period from 1995 to about 2015, it was about 20 years, was that I can, again, to give you some context, I was at the highest point in the options food chain, right? We were the top guys there. And the number one question that a client, a big hedge fund manager would have was a very simple question, which was, which option should I actually buy, right? Which one should there's 100 of them, which one should I buy? And the answer that I always had an answer. I was the expert. I had an answer. But in the back of my mind, I wasn't really sure that was the answer. And to me, when I tell people, I think it's an incredible statement. I'm at the top of the food chain. It doesn't get much higher than the group that I'm with. I mean, we're competing with Goldman, Morgan Stanley. This is the top of the top, and I'm one of the top advisors, and yet I'm not 100% confident that the answer I'm given is the answer, or the logic and process behind the answer is right. And I spent 16 years trying to figure out what was wrong with my thinking, what was wrong with the process, what was wrong with what I was saying, because it didn't sound completely right. And so 16 years later, I landed at a poker table in Atlantic City, talking to a guy next to me. And he says, what do you do? We work at a hedge fund. And he says, oh, options, I've always wanted to trade options. And I said, well, you'd probably be pretty good at it. The options is no different than poker, right? Poker is a probability game. It's a dynamic probability game. It has a pot. It has card odds. It has, there's a lot going on with simple math, but it's a lot going on. And you'd probably be good at it because you understand a simple concept called hedge. Right? And when I explained that to him as if options was just a probability game, it clicked right then and there. And I knew that the only way to win at a probability game is to play with mathematical edge. Okay? And what does that mean, right? So I literally got up from the poker table after 16 years of trying to figure this out. Got up from the poker table and started putting my thoughts down on paper, started erasing. It's hard for an expert in anything to erase everything they know and to go back to the beginning. And I spent the next few years actually realizing that the answer was in front of me the whole time, because I had that same answer right in the first week on Wall Street. They're teaching you options, and I just, raised my hand thinking, isn't it just this? Isn't it just a probability game? Isn't it just like NFL sports betting? They do have, like, for $1, you can do the teasers, right? The 3 teas, you pick 3 and you win like a lot more for your $1. And I was just sitting there and said, isn't it just like a probability game? Is it just like, 50% chance of winning? You want to win better than even odds? Isn't that the game? On first week of Wall Street, I don't know much, so I'm not going to fight the answer. And they're telling you, no, it's, you got to learn all about this and that. Turns out it's told about the Greeks and implied reality. You got to learn about all this stuff. That's how you get the answer. Well, 16 years later, I figured out, that's not really the answer. That's an answer for a certain person. But the industry has changed. The user, the end user of options has changed. And so there's this whole issue within the industry that essentially is a flaw. It's a flaw in the whole process of education. And so after 16 years sitting at a poker table, not with the smartest guys in the world around me, I'm around Wall Street, I'm talking to people, I'm always trying to get this answer. Nobody, these are the smartest guys on Wall Street, and they're just like, the Greeks and this, we're talking all about the Greeks and the Black-Scholes formula, and at the end of the day, it's a guy who asked me a simple question about what I did and talking about probabilities and options and relating it to poker, and that's where, you get the answer. I think it's an incredible story, and that's what I'm out here telling people.
Like,
we talked about, you're a stock trader.
Yeah.
Okay, so what I tell people is that there is no such thing as an options trader, okay? You're not going to be an options trader, okay? You have to get that out of your head. You're not going to be an options trader. The guy watching the video, he's not going to be an options trader, okay? When people say an options trader, they're talking about the guys right outside there, right at the investment banks. They're talking about the guys at Goldman Sachs when I was at Bank of America. They're talking about volatility traders, okay? They're talking about guys managing huge books. Those are derivative traders. Those are options traders, whether they're structured products, whether they're the listed options that we know, okay? That's an options trader. Market makers, they're trading volatility, okay? Those guys, those are options traders. That's what they do. They have a book of options, and they're trading the Greeks, volatility, and they're doing something that the average person is not doing. That group, the industry, which is the investment banks and the market maker, make up less than 1% of the end user. 99% of everyone, basically everyone else, is trading options for the directional leverage, period. Okay, for the directional leverage, for leverage and direction. And in options, no direction is a direction. So up, down, and no direction. That's what they're doing, okay? Now, what I tell people is, if you're trading stocks, that's great, but if you're not looking at the options market's so big now, if you're not looking at the options market, you're already at a disadvantage, right? Because where the whole investment process starts is with an idea. Patrick Wieland wakes up and says, you know what, today I like this stock, okay? Let's just say it's Apple. Apple's trading near its highs, but you know what? I think it's going higher. Okay, so fair. I don't know where Apple's going, and I'm not gonna say you know where Apple's going. But you know what? You're saying I think it's going higher. Great. How you got that to that conclusion? That's Patrick Wieland's process. Whether it was technical analysis, whether it was data, whether it was backtesting, whatever it may be, that's Patrick's way of figuring out where the direction of stock's going. The question you should start asking yourself, this gets you from being a beginner trader to the next level, to starting towards that professional expert, is there another way to play Apple instead of just buying stock? Okay? Can I use options? That leap is what the industry is trying to get everyone to do, and they spent $1 billion trying to do it. Can I use options? Okay? That's by itself is a big question.